Welcome to the Trading Lounge and the Forex report, and starting with the US dollar index here. As you know, we've been looking from wave 3 and working through wave 4 as a completed triangle, and looking for wave 5 to the upside, and looking at targets at the next level past that. This is a minor level here, 95. The next minor level is at 98. There's an important level at 96.50, so we've got that in mind there. I also just want to chuck a spanner in the works here and just point out that wave 4 corrections can get out of control a little bit in terms of doubling in size and getting more complicated and those sorts of things. It is possible that wave B is actually over here and wave C over here for wave 4. So a larger A, B, and C here for wave 4. I don't think that's the case, but just wanted to put it on the table there. What we would need to see is a collapse of this move here, past the 61.8% from this move to this move here. But as it stands, we're moving to the upside, and this would be the pattern that we're tracking to the upside, and a nice impulse wave for wave 1, an A and a B and a C wave here for wave 2. And I kind of like that it actually shows some strength, because it's a corrective move that is actually sort of, it's like a running correction. It's sort of running up the hill, you know, it's not pulling back here. So it is showing strength, and we would be looking at this working higher in this sort of fashion here, up for 1, ABC for 2, 3, 4, and 5 up to the 96.50, as I pointed out before, as being a bit of a door stopper. So with that in mind, we're looking at, you know, being short in the euro US dollar, the AU US dollar, and even the euro yen as well. Anyway, we'll get to those ones as I get ahead of myself. The euro US dollar. Once again, I haven't labelled this as a triangle here, and it's certainly possible to do that as well. I just want to keep it sort of simple for the time being, but the main point is we've always known that this is a corrective pattern because of this particular structure here being 3 waves. Whatever happens over here is is part of that sort of corrective pattern. But once again, as I just mentioned with the US dollar index and chucking a spanner in the works, so to speak, it is possible that this can be a B wave here and a C wave over here to complete wave 4 over here, and this is a 61.8% retracement level here. Probably past that a little bit, but that's it. So look, just putting it there, I know that's a little bit sort of annoying, but you know, that's the thing with Elliott. You've got to keep you got to keep all the counts on the table. Now, on the downside of all of this, this level in here, this 1.2, 112 here, is really important in regards to the trading levels, because it is part of group 1. It's the pivot within group 1, and group 1 is simply 1, 2, and 3. And once the pivot number 2 here becomes the retested resistance, then the market seems to get trapped and then gets pulled down to the closest largest number, which is this one here. And of course, we're expecting a low below here anyway, but it's just nice to have that pivot, always number 2, no matter what degree of trading levels that you're looking at, as a retested resistance, because then it just gives you a little bit of, once you get used to it, it just gives you a little bit of confidence that that you're heading in the right direction, and those orders that you got on will be a little bit safer. So that's what we're looking at here. And we can see here that it's interesting here because first of all, we've had the move come down, and we've got our bounce off the level, and you're probably more used to having a bull market classic trading levels pattern at a level, but this is one in a bear market here. So really, we've got this reference point here now because we never chase the first one down. We need a reference point, and we've got that reference point now. So this is the one that you'd want to be shorting from this point here. If you're not already short, that is, or if you're looking to add to positions, then that's a nice place to do it. The Australian US dollar is the same as well. And what I mean by that is that the corrective pattern that we've been looking at through here has been the same as the euro, same but different. And we're seeing this come off its high here now as the A, the B, and the C wave here. So we're on track to go lower ground here. The RBA have got their minutes for their meetings today as well. The general consensus is that they will knock some basis points off the rates, but you know that's always a guessing game. What I like about this situation here so far is that we can see that the 78 here now, you know, we've come down, we've bounced off it, we've come through it, and we've gone back and retested that now. Do you know what I mean? So we've retested that particular number, and if it takes that low out there, then that's the trigger to short this one. Okay, so that low's at 77.55, which is good because we would also use the 72 there as well. I might just go in a little bit further than this as well, just one more if you don't mind. Okay, so this was the reference point that I was looking at here, but we've got this beautiful number here, 77.72 here, and we can see that that's becoming here in this process the retested resistance here. So essentially we could look to short this low here rather than this one here. Okay, so that's good. The pound Aussie now, look, I'm a little bit unsure about some of these crosses at the moment, so we just need to be a little bit mindful. Now in this particular case here, this pattern here that I'm looking at here, you can see that it's got overlapping wave structures, meaning this low is overlapping this high and so forth. So it's a very sort of it's a very corrective pattern going up here. How big will it get? And I'm not sure. This move from here down to here and coming back to these levels here is the 61.8 retracement level. So it can fail here, but we don't have a lower high just yet from this triple top here. It can fail from here. So if it takes out this low here, then short it. If it finds tested support on 198, then be long. Okay, that's all I can really say about that because I've gone through all the patterns and it just leaves us with a balanced line to look at. So long on 198 of tested support and short below this one here, this low here. The euro yen, the euro Aussie. This one here is another little tricky one too, in line with the pound Aussie as well. Now, we just need to be careful which side that we get on. It is sort of interesting because this market is working itself into a particular corner. And what I mean by that is that we've had this move down through here, then we've had our sort of, 61.8 retracement level here. The market's moved back down here, checking demand down here, gone back up, check supply here. The 60 odd percent, come back down here, is bang on the 61.8% here. So really it's kind of like a little triangle in a way, but really what's going on is that it's check demand, check supply, check demand, check supply, check demand. So it's going into, it's really diminishing into a particular point. It'll come out of that space. Now, we just need to sort of understand that a little bit. So from this move coming down here, we're right on the 61.8% mark here. We have counted this rough looking pattern down here as an A and a B and a C wave here. So we were looking for a move back up through here, and we are getting it, but is it worth trading? How much faith do we have in it and all those sort of things? Well, first of all, if we traded along here, we would be trading against the main trend here. So that's dangerous within itself. When we let's go in here a little bit further. Now, this this little move here going from this, I mean, this is the actual low here, okay? So, well, close to it. So we do have 5 waves up here. So, technically we have 5 waves up here. We would be looking at this as and that's pulling, an A and a B and a C here, and then we could move up from that point there. So if you see that, then be long on 144 after you got this other move down and so forth. But one of the problems here is that this move, I have to label this one down here as wave B here, this one here as wave A. And the reason I need to label this as wave B here is because we've got 1, 2, 3, 4, 5 here for an A wave, A, B, C for a B wave, and this is some sort of skewed C wave here. So in a nutshell, this B wave here is in a reasonably clear 3 waves. So it makes this an A wave, a B wave, and a C wave up here, pulling back up to this circle here, which is always the 61.8% on top and the 50% below. And this move down here is the 50 and the 61.8 from this point here. So it is working itself into a diminishing point here. So well, somewhere up here you could go long, and perhaps somewhere even lower here. I mean, there will any move down here, of course, will, if we are going in a bearish mode here, which I think that we are, then any move down through here, we would be looking at this as 1 and 2 and 3 and 4 and 5. So we'll get an A and a B and a C here, and then down from here. So it's working itself into a corner, and this is a balance line through here that we're working with. So I think it's still going to take a session or two before we can actually say that, with confidence, that we have a direction for this, rather than sort of getting into the guessing game of the count. But as it stands here, this count here is best as an A and a B and a C, and should work lower from this point here. Okay, so I'll leave that with you. I don't think the setup would be over here. Once this market moves down here and then moves back up in a corrective wave, then we can start looking further down through to here. So we need to get those lower highs. We need to get an impulse wave here, a corrective wave here, and so forth. So if I'm wrong, then this high will be taken out, and you need to be long at that point there. So we do have this number here, which is important, the 144. So maybe 144.20 here. Normally we would be long on 144.30, the top of group 1. 3 is always group 1, so would be long on that. Okay, moving on to the euro yen here. Now, this is very much like the euro US dollar, this pattern, this particular pattern here. We know that this is a corrective pattern here. Once again, this is and should follow the euro lower. But once again, this move up through here is corrective. This move coming down here, it also reminds me of being bullish corrective. It's got overlapping wave structures, and this now is back at the 61.8% mark here as well. So it's possible, like I explained with the US dollar, it's possible that we've got an A and a B and a C wave still coming up to finish the 38.2 retracement level, and then down from there. So really a lot of care needs to be taken here. Once we've got group 1 here, so we know that the pivot in group 1 is 132. If that becomes the retested resistance, then we know that we're down from that point there. Anyway, let's just drill in here, and we're looking at it as a bearish mode, and it is edging lower. So just looking at this little rally in here, I mean, this is the 50 and the 60% retracement level, of this move up here coming back here. But you can see my concern is that, we're not looking at impulse waves down here. These are all corrective waves here. And if we do start to get 5 waves up off this low here, which I'm going to explain in a moment, then we're going to get an A and a B and a C, and then we'll go up from that point there. But we'll look at this in both ways. We'll look at it as a corrective rally, where it can move up to here and then just fail from that point, and also as a 5-wave structure. So you will know in due course, if you observe what we're going to look at next, as as a pathway for this. So off the low here, if I can just go back here 1 second, this wave 2 is what we're going to focus on first, and it should be in 3 waves, and it should be a corrective rally. So from this low here, we'd be looking at this as the A wave here, the B wave here, and then 5 waves up for the C wave, which would be 1, 2, 3, 4, and 5. And that would make wave C of 2 there. And it doesn't have to move very high, it just really needs to move just above here somewhere. So a little move up here, and if you can count this out here, we're looking for 5 waves here, and then failing from that point and then moving lower from this here. So that's what we're looking, that's our primary count in line with the euro US dollar. If however we get a more positive pattern emerging, it would look like this. It would look the same here, but would have wave 1 and wave 2 here. It would still have the 1, 2, 3, 4, and 5 here, but it would be the third wave there. And then we'd come back for the fourth wave to the fourth wave of 1 lesser degree, which would be here, and then we would get 5 waves up. Okay, so we'd be looking for 5 waves up at this point here. And in a bit of a nutshell, if I use, just to get this on a more, just find a chart here, just this one will do. So we'd be looking at 1 and 2, and then 1, 2, 3, 4, 5 for the third, back for the fourth, and up for the fifth. So if we get 5 waves here, then we'll get an A and a B and a C here, and then we'll be moving on to the long side from that point right here. So it is important to understand this little structure here. At least we know where we're, where the line in the sand is drawn, and we know where we're right and we're wrong, and it helps us manage things a little bit better. But as it stands, we're looking for a move lower from this point here, not this one. Alrighty, well that's it. So I know we've got the pound yen to go as well. So now the pound yen, this is just the weekly chart here, and all I want to point out here is that we are looking for a short position here, and in that short position we'll look to short the weekly low. Now this is all of this week's here, so you can see that it's a doji, basically equal buyers, equal sellers, all those sorts of connotations, but we're looking for a short trade, so taking this low out here would be part of that process. So we can look at that 184 area there as a short trade with a stop above that, and we'll just tag it to the downside. In terms of the actual structure, we're looking at the 61.8 retracement level up here. It's been up here for a week or so, a bit longer, but we're looking for that to roll over. But we need evidence that it is going to roll over and not just consolidate and move higher. We can see that it is starting to creep to the top here. So we know that there is selling pressure in amongst there. In terms of the wave count, we've been counting to the upside, so we're looking for the 5th wave there. But to break that down a little bit, we're looking like this here. So from wave 4, and even yesterday we were looking for 5 waves up through to here, and we were looking at 1 and 2 and 3 and 4 into here, and then 5 up to here. But we can see how big 4 has got here, still a corrective pattern, and still can make a move higher here, and giving us overlapping wave structures here as well. So it is, it is displaying weakness. This is the 1 and the 2 and the 3. And yesterday we were looking for wave 4 with a wave 5 to push up here to new high to finish that. But now I need to put that, and that could still be the case here. That could be the wave 5, but I just want to, get a breakdown from here. So we know that the 184 area on the weekly doji thing is a possible short area there. So if we can see this collapse from here, then you know where you are from that point. And the weekly robo is a really good way to actually stay in a trend. So, but still, what we're looking for now is we just want this to complete. It may not complete here. It could fail from a 61.8 retracement level from this thing here back up here, and then fade from there. At least you know where the short is here. Otherwise, while it's above the 184, it can have 5 little waves up there and then fail from there. Alrighty, cheers. Thanks for tuning in.
Hello, and welcome back to another edition of What's Moving in the Forex Market, brought to you by yours truly, Kurt Capra, and Pristine Trading. Please keep in mind that all comments made by myself, as well as any other pristine instructors and representatives, are for educational purposes only and should not be construed as investment advice. Starting each session, like we always do, in the upper left we have Euro US dollar, and as we can see, a very nice move higher has taken place over the last 2.5, 3 weeks, with last week pushing up so much so that it actually broke above resistance to our left. What does this mean, though, for prices going forward? Well, in the short term, it does mean that we could, after seeing a pullback, begin to see prices rally once again. But rally to where? And in order to really answer that question, we'd need to look at the weekly chart. And on the weekly chart, you can see that we are up into this declining moving average, and we do also have some resistance to our left over here, which could create a bit of a stall. So it will be very interesting to see what happens from this point forward. If I had to guess as to what I believe would be happening here, I feel that the most likely scenario is that here the Euro US dollar pair will stay strong overall, but we're not going to see as robust a rally as we saw last week. So, in other words, yes, we could see a push back up, but I don't think that it will be as strong and as fluid as what we saw last week. So overall, still a bullish bias on Euro US dollar, but with some caution in so much as not expecting as strong a rally. Moving to our right, we have Aussie US dollar, and it too had a very strong move up, which broke above resistance to our left over here. We've since seen prices pulling back into this support area, and they're trying to stabilize. So at this point, while it is likely this continues to stabilize and try and push higher, there's also likely going to be somewhat of caution, some struggle to move all the way back up, and that's based on the angle of retracement. So we'll see what happens here, but overall still a bullish bias, but I wouldn't expect it to just rally right back up without first reacting maybe somewhere in this 50% retracement level. Moving to our right, we have New Zealand dollar, US dollar, and this has still been pretty much a mess. It is slowly grinding its way higher. You can see here we've got a series of higher lows forming, but the highs are relatively equal. So the range continues to contract, but this is one of those sit on hands pairs, as it really isn't doing much of anything in terms of good quality trending type of movement. So we'll just sit on our hands and see what happens there. As far as the weekly, trying to gain a little more insight into seeing what might be causing this indecision or where we might ultimately be resolving. We see that the weekly is really still in a downtrend. It's weak. It moved up into resistance and really looks like it's going to need to start coming back down this coming week. So be on the lookout for that. If we break daily support levels, we could then begin to see a bit more fluid movement. So overall, a bit more of a bearish bias overall, but still, as I said, primarily a sit on hands type of environment here on New Zealand dollar, US dollar. Moving down into the bottom right chart, we have US dollar yen, and as we can see, once again, this pair has held this support level down around the 118.55 level and had a pretty nice rally to the upside. Now we do have some resistance to the left here that we'll have to contend with and see how well it can be absorbed. But if it can hold well, if we see buyers coming into US dollar yen, we could conceivably get a move all the way back up towards this prior resistance area around 121.67 or so, or the 121.36 area. So somewhere within that range is certainly not out of the question. And when we look at the weekly time frame, the weekly is just in a very nice consolidation within what we call a stage 2 uptrend. So with last week closing bullish, it appears as though this pair is getting ready to make a run back up towards the top of the range. So definitely want to be on the lookout for that possibility. But we do have this little bit of a sticking point. I don't see that it's going to be a major hurdle to overcome, but we do want to be aware of it. Moving to our left, US dollar, Canadian dollar. Nice downtrend in place here. We've rallied up into some resistance, and it's looking to roll over here now. And that's really the bias. We want to have a bearish bias here as this is downtrending, and as we look at the weekly chart, we can see that there was a break of this sideways consolidation. And while we did get a bottoming tail at the end of last week, that's nothing more than the retracement which we just looked at on the daily time frame. So this could easily roll right back over, showing no follow through to this bottoming tail. So as I said, the overall bias is definitely bearish. This weekly could cause a little bit more of a pause, but overall, we want to go with the trend. We want to go with the flow, and the flow right now is to the downside, although you do want to be aware of this prior low, as it could cause a bit of a stall. But ultimately, your management rules will dictate how to handle this area when you reach it. If you don't have a trading plan that addresses how to handle that type of scenario, well, then you need to consider that, and you need to build something into your plan that addresses how you will manage your position if and when prices reach a prior low or prior high for that matter. You need to know how to manage a position at that point in time, even if that means not changing the management at all and sticking with your original approach, but still needs to be addressed. And finally here in the bottom left, we have pound US dollar. And as you can see, again, very nice rally over the last 2.5 weeks or so. Most recently, we have had a sharp retracement, but this retracement is coming down into a support area. So while in the short term, it's come in rather sharp and at a more bearish angle, it is coming into support, and we'll see if in fact buyers begin to show up. As we take a look at the weekly time frame, we can see the weekly is still in a downtrend. However, we did have a nice little low set in down here. We're probably not going to be seeing this low violated in the near term. While we may see a bit more of a pullback, I do not expect to see this low being violated here in the next 2 to 3 weeks. So we'll have to see how this all plays out. We could, unfortunately, be in a scenario where the pound US dollar begins to chop around a bit because you've got a weekly which is in a downtrend after moving into resistance, and then you have a daily which is trying to transition into an uptrend. So you've got these two time frames that are in conflict with one another, and so we'll have to see how that all plays out. But until next time, stay patient, stay disciplined, stay confident, and we'll talk again soon.